The Johannesburg Stock Exchange, JSE, hit a record high of 81,364 points on Inauguration Day, driven by optimism over South Africa's planned Government of National Unity, GNU. Financials and SA Inc. stocks led the surge, with significant gains across banking, financial services, retail and consumer sectors. The rand also strengthened against the US dollar, while some experts debate if the market's reaction was an overreaction. JP Morgan has upgraded SA equities to overweight, reflecting increased investor confidence. Joining me from Johannesburg, South Africa is Viv Govenda, a portfolio manager. Thank you, Viv, for joining me today.
Thanks for having me.
All right, so we saw the JSE, it hit a record high of 81,364 points on Inauguration Day before it lost some traction in the afternoon to close at 80,714. I'm tempted to ask you what happened, but however, do you see the markets closing above the 81,000 psychological mark anytime soon?
I think it is quite possible. I mean, we have some incredibly cheap stocks. If you look at things like price to equity, ratios, P ratios. You look at dividend yields, especially in the banking sector. We have some incredibly cheap stocks out there, and the reason that they've been so cheap is because South Africa over the last year or so has experienced, I think, quite a bit of difficulty. We know about, of course, what's happening with load shedding. There's also things with the Transnet, which is the public railway and ports authority. Transportation Authority. Of course, there's issues around, uncertainty about the election and so on. The hope is that, as I said, this government of national unity, there's not quite the government of national unity, it's a multi-party coalition, effectively, because effectively the third and fourth largest parties are not in the coalition, and you normally do have, most of the big parties in the government of national unity organization. But the hope is that the DA, which is the second largest party, would be able to do something about the corruption and the inefficiency that's been happening in the country over the last few years, and get things back on track with regards to things, for instance, like electricity reduction, like I said, transport, and also possibly halt some things that had worried the market, such as, for instance, the introduction of a new health scheme.
All right. Well, Tuesday's okay, I guess you're done. Now, Tuesday's 3.5% surge is actually the first we're seeing in many years. We're seeing the JSE jump higher, and it's not even on offshore news, but on local news. Could this be a market overreaction, as some are saying? Because, the last time the JSE jumped by more than 3% on a single day was November 2022, and then in 2018, when Ramaphosa became president. Is that a market overreaction?
It all depends on whether or not the hopes of the government, of the country on the market are fulfilled. Look, even if we don't have a situation in which you're going to get all the perfect things the market wants, but all you have to do is basically halt some of the fall. For instance, hold some policies that are probably negative for the market, such as, for instance, like I said, the national health insurance scheme or national health initiative. Also, do something with regards to just efficiencies at places like Eskom and Transnet. You would find that this is probably underjustified. Estimated just how big the impact will be. We were having a case where some of our biggest banks were operating at like 7 and 8 P ratios, while giving dividend yields of higher than 7 or 8% per year. That is an incredibly cheap asset if you think about it. According not just to historical levels in South Africa, but internationally as well. And the reason for that was because of the fact that we are seeing, I would say, quite a negative trend in a number of indicators for South Africa for the last few years. If you could hold that, that alone would be enough, I think, to justify this move plus more.
Okay, so looking at what happened, I'm really particular about the numbers, and that's why I'm sort of interrogating all the numbers we're seeing from JSE. Now, we saw 37 listed companies hit 52-week highs on Tuesday. 37 companies hitting 52-week highs. That's no small, feat. Now, how impressed are you by that? And what do you think this signifies about maybe the current market sentiment and also economic outlook?
If you look at dollar terms, the JSE has fallen behind things like the S&P 500 international markets dramatically over the last several years. International equities have outperformed local equities for many, many years. And if you had to go back 10 plus years or so, the early 2000s, late 1990s, and so on, you would have found like that would be the opposite. Local equities, consistently outperformed what is happening internationally. So I think there's a lot of catch up to be done. Number one, I mentioned the cheapness of stuff. I mean, it's not just with regards to the banking sector, retailers as well have been incredibly, badly hit. You look at some of the biggest retailers in South Africa, things like the Pick and Pays of the country and so on. They've been incredibly badly hit over the last several years. They're actually a fraction of what they were worth just a few years ago. To some extent, we've been helped out by a couple of things. For instance, the resources sector has been, recovering a little bit. We've also seen, the fact that we have a company like Naspers on the exchange, which has helped us a lot because it's holding in Tencent in China, which has made it the biggest company in the South African Stock Exchange. Those things have helped. But I mean, there's a lot of companies in this exchange at the moment which have fallen dramatically. They may be at 52-week highs, but they're not at all-time highs, even though the index is. And if you look at how much they have to go back to be even near all-time highs, it's still a significant rise from here.
Well, given the long run of foreign outflows from South Africa and, of course, the big all-time low in the country's institutional funds holding of domestic equities, do you see big flows into equities near term as a result of what we're seeing right now?
I think near term you will be. A lot of the stuff that is happening with regards to outflows from the country also has to be done with the regulation. South Africa has a huge, absolutely gigantic retirement to this sector because of regulations, because of taxation and so on. We have, I think, over half, it goes over $300 or $400 billion of assets in our retirement pot in this country. So there's a huge amount of money. And the rules around it have loosened over the last few years with regards to just how much has to be kept in South Africa versus overseas. It's still more than half has to be kept in the country, but it went from being about a third overseas to now we can do about 45% overseas, which obviously for such a large pot of money makes a big difference. Obviously, as well, you have exchange controls which are reasonably lax in this country. I mean, you're talking about being able to take about 11 billion rands per person out of the country per year without too much difficulty. That's, even though it's come down in dollar terms, in excess of $500,000 per person. A married couple can take $1 million a year, effectively, plus. So we're talking about, very loose exchange controls in terms of the size of the economy and the amounts of money we talked about. So those things, I think, have affected it. And of course, like I mentioned, the fact that the market has underperformed. But if you do see a bit of optimism come around here, there is a lot of money sitting on the sidelines, especially by the corporates. That could be put to work reasonably quickly. I think that could fuel a short-term boom in the country. Longer term, obviously, there's maybe long-term situations, electricity, education, etc., that have to be solved. But short-term, I think there's a lot of opportunity.
Right. Let's talk about the financials index now. It surged almost 7% on Tuesday. For Nigeria, here in Nigeria, actually, until the recapitalization news, we saw the financial sector enjoy, the same sentiment, lifting the Nigerian local bourse to several record highs. So tell us the sentiment this sector enjoys in JSE, and then do you also see anything upsetting this present trend in that particular sector?
Yeah, look, like I said, we had some of the biggest banks that have been around for over a century, trading at like below 10 PEs. And actually having dividend yields that are above their PE ratios, which is, if you look at normal rules of thumb, etc., around what you'd expect for valuations for reasonably stable companies would have long histories and not likely to go bankrupt anytime soon. This was incredibly cheap, and so there's a lot of catch up to be done in the banking sector, especially. In addition to that, South Africa has come to a point right now where we are seeing a lot of new banking, stocks coming to play. In fact, one of the biggest companies in South Africa's, financial sector is a company called Capitec, which is a pretty new bank, only opened in the last, few years or so. And this is a multi-hundred, in excess of 100 billion rand bank. Just being created in the last, like I said, few years or so. We've seen some of the bigger corporations like Old Mutual and Discovery also come out with banks as well. So not only is there optimism about the listed equities, but there's also optimism about the actual sector as a whole because of the fact that you can just see that the bigger corporates are actually starting to create their own financial institutions as well.
Right. We also saw the rand sort of rallying below 18 rands against the US dollar, strengthening more than 1.1%. Now, analysts sort of also anticipate a further appreciation to somewhere around or even below 17 rand. Do you see that happening anytime soon? And do you think this present surge can also be sustained?
I mean, the rand can get very strong or very weak, and for prolonged periods of time. It's a very volatile currency in terms of just the fundamentals of the country. I do easily foresee it getting stronger from here, especially if we can take some of these silly bottlenecks we have in the country. I mean, if we can do something with electricity, and I have to mention the fact that load shedding in this country hasn't been around for about 3 months now. So there was a belief that before the elections that the ESCOM was basically fiddling the books in effect by what they were doing was effectively burning diesel towards saying no to maintenance at the moment in order to get a situation in which they could basically make sure there was no load shedding just before the election. But the election's been and gone, like I said, 2 weeks ago, and we still haven't had load shedding return. So hopefully, fingers crossed, that's a situation that continues. Transnet, which is important because our mines have been unable to get stuff from the mines to the ports for export, also, is another easy, I think, or a low-hanging fruit to be solved. You solve those two things, and the rand will be easily stronger than it is right now.
Right, I would like to go without asking you this. JP Morgan Securities actually raised SA equities to overweight from underweight. Now, how do you interpret this shift in their asset allocation, and what might this mean for future investments in South African stocks?
Yeah, look, I mean, South Africa, like I said, a huge amount of local investment. We don't rely as much on international investments, international borrowing as most places, because, like I said, we have this huge retirement pot in this country that's very, very large and regulated to be mostly in South Africa. We do also have some exchange controls that keep money in, and people are reasonably, like I said, steadfast in their belief in the country. I do think that if you can see even some minor things like just fixing ESCOM, fixing Transnet, having more certainty around like the BU rules and the mining rules in the country, which have been really hampering us for the last little while, we could see a significant improvement in the country just because we've just had effectively a lost decade. If you look at South Africa's per capita GDP at 1994, which is 30 years ago till now, relative to the overall emerging developing market countries out there, we went from being more than doubled it to just slightly below it in the last year or so. So there's a lot of catch up to be done out there.
Right, Viv Govenda, portfolio manager from South Africa. Thank you so much for your time on the show today.
Thanks for having me.